Hello, hello, hello. Good morning, traders. Good morning. How are we all doing? Randall, hello, hello. Awesome. Right, I am sharing the right screen, I think, this week. So, quick note before, just while we're waiting for one or two people to log in. If you're not in our loving traders community, it's open to everyone. You can get into the free area. We've obviously got some private areas for the coaching side of things, but if you want to come along and join, I generally post what I'm trading. I don't actually sell my alerts in a newsletter. I used to. For several years, I ran a newsletter, but I generally post what I'm trading as I'm doing it. There might be a little bit of a delay, but 24 hours, 48 hours tops. It's not really time critical with the way that we do things. This is obviously the fastest way to get in touch with me if you've got any questions during the week as well. But obviously, feel free to come along and join the fun. So with that said, everyone's just coming in. We've gone past 9 o'clock. We're recording. Awesome. Right. So the way these sessions go they're going to run up to about 60 minutes. There's going to be a quick 2-minute intro for anyone who is brand new to these weekly sessions, just so that you know who I am, why you're here, what day it is, the usual stuff. And we're going to go through some stock market stuff, look at the indexes, look at some stocks. Sometimes there's a theme. There is this week, and I'll be exploring patience. It seems to have been a common theme this week with many people in the community, but patience is what pays us as traders. And that's the general theme that we're going to be exploring this week. So the best way to get the most out of these sessions is interact, comment, like, share. If you're watching the replay, smash the like button, whatever. Leave a comment. I will get to it. I will see them. I've got the comments if you're on the live session right now, so I can see them in the chats. Hello, Glenn. Morning, Randall. And as you were saying, patience is a virtue. If you haven't got questions, just chip away. I can see them on my other monitor, and if it's appropriate, I'll answer it in the moment. So who is this weird guy with the squeaky high-pitched voice? I'm just a regular guy, Phil Newton. I like enjoying myself, having fun. And for the last 28 years now, I've been helping regular people, good people like yourself, become better traders and get profitable results. At the moment, I generally just focus on swing trading, although I did spend 12 years as a day trader. The first 12 years, again, short-term swing trading, and then just evolved over time. I generally teach what I call a production line trading system. It's for me first and foremost. I say this pretty much every time, at every opportunity. I want it for me first. I want what I do. I want it rule-based. I want it methodical. I want it systematic, because it helps me trade. I, just like everyone else, made all the mistakes that everyone else made. I got in too early, out too soon, and vice versa. I'd chase moves. I would go long, short, red bar, green bar. I've made all the mistakes. So the production line trading system, as we know it, or as I know it today, it's a series of rules to help me follow the system, because buying the dips works, selling the rallies works, buying ranges, buying breakouts, selling the range highs, selling breakouts, and even counter trend trading, although I don't like doing it, it all works. But what makes it work for the individual trader is a systematic approach to, well, what is a dip? So that's what these rules are. And then the other thing, which is the theme for today's session, is patience. Chasing moves, following moves, waiting for the opportunity, waiting for the setup. The actual act of trading is absolutely minimal. So that's what I do. That's what I teach. That's what I try and do. Give back to the community on these Friday sessions, just like I've helped thousands of students over the years, quite literally, get results. And you're just seeing some of the examples of this in my trader community. People very not easily. I'm not going to pretend to say that what we do is easy, but it does get results. And again, here's some examples of my results with the broker statements. Again, I mentioned all of this not to kind of thump my chest and say, look how great I am. I know what I'm doing. I don't need to do this. I do it because I love doing it. I love trying to help shortcut people's experiences. And again, they get results. They're all here. You can press pause on the recording, or see them on the websites. The bottom line is I'm just a regular guy. As I said earlier, I love a good read, I love a good ramble, I like coffee, I like a quiet life, I like a slow pace of life. I'm not going to proclaim that I sit on a beach sipping mojitos, trading from a laptop. I like when I'm away from the desk, I'm away from the desk. I like flamingos in a strange way, but most importantly, I like spending time, having experiences. The last few weeks, I've just caught up on the slide deck. I like Harry Potter. Again, I've got a thing for it. I don't know why, but we went and had a wonderful experience. We had some Halloween fun. There's nice Liverpool lights as we head into the winter. Had a comedy night the other weekend, which was great. And I went rambling and went deer stalking. I saw deers up close for the first time. I did fall over and bang my elbow, but nonetheless, what I'm trying to get to is, like, I'm not a Wall Street guru. I don't sit in an office hatching evil schemes, trying to take over the world. Trading facilitates the things that I enjoy doing. And I fully appreciate that I'm very fortunate to be in that place, but it's because of trading. So hopefully it's just going to inspire you to know that it's possible. And just leave you with a question at this point, like, what would you do if you had a little bit of extra time, a little bit of extra cash, a little bit of extra freedom? How would it impact your life? How would it impact your family? For me, it's been a godsend. For those of you who know my backstory, I've got Crohn's disease. I spent 3 years in my own personal lockdown back in 2001. I literally couldn't go anywhere, but I still had bills to pay. I still had things to do, food to put on the table, the lights to keep on. And trading was my, the way that I did it. I'm completely unemployable these days, but it's all because of, production line trading, because that's the code that I cracked for my own trading. Now, while I do give away as much as possible in these open sessions, you can work more closely with me. As you might appreciate, I've got almost 28 years of experience of actually doing this and making a career of it. So I'm not shy about saying, if you want my time, you pay a premium, but I will give you as much as I can today in these free sessions. But if you do want to work more closely with me, I run a group program, and that truly is the fastest way. I'm working with a wonderful group of people at the moment who are literally breaking the barriers and starting to see results and structuring all their knowledge into, again, what we call a production line trading. It's made up of 3 components. I generally go through these most sessions. We're going to look at this again today. It's a mechanical assessment is the first step. This really is the secret to not flicking through chart after chart after chart like a mindless zombie, wondering if the next chart is the chart. We've all done it. We've all sat there just flicking through charts, or even just watching the live prices, watching your open positions, watching open portfolio. It's just absolutely pointless. It's a waste of time. So this is the first step for me. That means that it's time efficient. We've all got other things that we can do. So we want to be able to zero in on the best opportunities every day. And step 2 is very linked to it, the visual confirmation. Just because you've got an average price crossover, what you think is an overbought or an oversold condition, or something with Dow 3, GAN 3, Outwave 3, one of the other tools, the indicators, the widgets, the widget bangs, whatever the mechanical thing is, just because you're expecting to see a MACD crossover, for example, and in other words, a change of direction or a resumption of the trend, doesn't mean that you're actually seeing a trend chart. So we want to confirm what we're seeing. We've got 6 money making blueprints that we work on. Buy the dip, sell the rally, buy range lows, sell range highs, buy the break of range highs, sell the break of range lows. There's 6 money making blueprints that I use, that I teach. I don't worry these days about the specific minutia of the individually named patterns within all of those things. I just want to go with the broad money flow and profit from the institutional direction. That's all I'm trying to do, is jump on the shirt tails of the money flow. And that's what these 6 money making patterns do. And I can zero in on them usually pretty quickly. Third step to me is entries, exits, stops, and targets. We want to know what we're doing, when we're doing, why we're doing it. We want to know all of that before the trade is placed. There is nothing worse than putting the trade on and going, now what? Where's my stop loss? You start off trading and you end up becoming an accidental investor because you've got no further plan beyond pressing the buy button. It's a horrible experience. It's a horrible place to be. So stop doing it. Just figure out where you're going to get in, where you're going to get out if it's not working, where you're going to get out if it is going the right way, and don't hold and hope that it goes the right way. I also teach a hedging strategy. that means that even if it's not working, I can make money. And I've actually made a lot more money on the trades that didn't work out this year than many of the trades. Well, one or two, like NVIDIA, just went to the moon. But several trades this year, PayPal springs to mind. I've made more money on PayPal from the trades that didn't work out because of the hedging strategy that we use and teach. And it's what we used in my Forex fund back in the day. I think anything over 15 years will qualify as back in the day. So yeah, that's what we use. That's what we teach. That's the process. And let's go and start exploring the charts. So before we do that, it's going around in circles. That was last week's. Let me just do. Patience. It is how we get paid. Okay, so, and typing is not obviously my specialty either. So patience is how we get paid as a trader. So hurry up and wait. I find myself saying this several times this week, which is what's influencing. This will just be a brief thing, brief comments. And just because it's brief comments, don't mistake it for not being important. We get paid to wait. It's one of those weird career choices that we have. The actual act of trading, and even if you're day trading, even if you're doing very short-term trading and short-term focus, did it for 12 years, the actual act of trading is minimal. No matter what time frame, no matter what your objective, whether you're a day trader, short-term swing trader, get paid at the end of the week, the end of the month, the end of the year, or if you're investing, waiting is how we get paid. Waiting for the setup, waiting for the opportunity, waiting for your points, waiting for your moments to get in the trade. Then you're waiting for the target. Then you're waiting for stop losses, for trade management. It's all about the waiting, the actual act of doing the act of trading, the click and the putting the trade on. It's minimal. I would even argue that the analysis side of things, most people flap around putting trend lines on, and I've got to admit, any of my students will know that, like, stop moving the charts, stop putting trend lines on there, stop dicking around, stop unnecessarily adding lines that don't make any sense. I very rarely put lines on the chart. The only times that I do is really to help you visually see what I'm looking at on the charts. But the reality is you don't need to put the trend lines and the widgets and the whiz bangs and the tools. It all looks good and it's super sexy and it's wonderful to have like 1,000 trend lines on your chart. But really, is it really making you a better trader? Like, really? Just think about it. Like, all you're doing, all you can end up doing is putting trend lines on and inching it and adjusting it and tweaking it. Let's go through some examples. I hit the charts. You can end up, that said, I've got some trend lines on here. I put these on several months ago, as most of you know. So I'm putting them on. I'm not messing around with them. And that's really the point. When it's obvious, you can use them. But I think when you look at a chart, when you look at an opportunity, when you're looking at let's find an example I've not looked at for a while. Let's look at something like Pepsi. So when you're looking at a chart, the way that most people approach, for example, using trend lines is what we've kind of going to run with for the moment. They'll draw a trend line on and they'll connect 2 points, and that would be it. And then they may go connect those 2 points, and then they'll draw those trends, and then we'll get a trend line there, and they'll draw a trend line there. Or maybe we can connect these 2 points. And let's face it, any fool can connect 2 points. Anyone, regardless of your experience. So what we're looking for is multiple points of reference. I think that might be the best thing. And it doesn't matter whether it's a moving average you're using. It doesn't matter whether, again, it doesn't matter Dow 3, GAN 3, LOA 3, blah, 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 all the other nonsense. It doesn't matter what it is, but you want multiple points of reference whenever you're doing some sort of analysis. The way that I do it is, well, first and foremost, most time to not do it. And if you are going to apply some discretionary choices, like, don't get bogged down spending 2 hours trying to analyze a chart, because it's absolutely pointless. Because you're going to spend 1, 2, 3 hours looking at maybe 2 or 3 charts at most, and you're going to spend hours, whatever you're doing, analyzing, and you're drawing the trend lines, and you're drawing the things, and maybe we can put something there, and we've got an average price crossover there, and maybe we put MACD on, or we do stochastics, and it's overbought, and all the other nonsense, the minutia. And all you're doing is wasting time trying to find a trade that's not there. So what we want to do as traders, the chart screen is intentionally blank. So what we want to do first is we want to know what we're looking for first and foremost. And might that be fair to say? So that means that we can be efficient with our time. We're not unnecessarily flapping around the charts, and we're going to be zeroing in on what we're looking for so that we can put the trade on and bugger off and go and have fun. For example, as soon as I finish today, I'm going to do a quick recording for my students. I've got some super sexy slides for everyone. In the members area, I've got a brand new training for everyone. So I'm going to record that. That's going to take me 10, 15 minutes, get that all prepped and ready. And then I'm going to close everything down because me and the missus, we're going out. We're starting our weekend early. So it's time efficient. And again, what I really want to come down to, it's because I don't want to spend time looking at the charts that dictates how I approach trading. So anyway, coming back to our production line earlier, we've got a mechanical scan. I'm just going to use M for that. Number 2 of our process is visual inspection. So what we want to know is, what does that entail? Now, this is where you can say, okay, well, on the mechanical assessments, I'm looking for an average price crossover. I want to know, for example, if the 50 period is above the 200 period moving average. Usually that is referred to as a golden cross, and it can be a good indication of the long-term or longer-term trend. And that's what I use. If we were talking 3 years ago, I would have been talking about the same concepts in terms of Bollinger Bands. The point I'm getting to here is the tool that we use doesn't matter. We just need to use the right tool for what we're looking for. So for me personally, I'm looking to buy the dips. I'm looking to sell the rallies. After that, I want to try and find price in consolidation. I'm looking to buy range lows. I can also sell range highs. And then, where's the other thing? I can buy the break of range highs, or I can sell the break of range lows. So these are 6 money-making patterns. Again, in the range, there's 4 things. Again, buy range lows, sell range highs, buy the break of range highs, and sell the break of range lows. So there's 6 patterns. That's what I'm looking for. That's the end result. And the average prices is going to help me find all 6 of these patterns. That's what we're looking for. Now I can do some of that work over here on the left. So one of the columns that I have here, that particular one there that I'm just putting an arrow under, let me just highlight it in white. So that column there that I've just highlighted, if you're on a mobile, if you're on an iPad, if you want to pinch the screen, you can zoom in and move things around. If you want to look at some more detail, if you're on a desktop, there is a choice to zoom in. And generally, it'll follow my cursor around if you do want to zoom in and look at some more detail. If you're watching this on the recording, tough. Unfortunately, I can't make YouTube do what I want it to do. Watermark. Okay, I'm not actually showing a screen, Glenn. I'll do that in a moment. Sorry, not showing a chart yet, but I'll do that in a moment. Thanks for the reminder. So the point is where were we? Oh yeah. So I can look for, is there a trend? And the mechanical scan, so the mechanical evaluation is saying on this list here, this is saying to me, the 50 period is either above or below the 200 period moving average. And if it's above it, it's going to give me a bullish indication. And the number is telling me how long it's been in a trending state. So I can very quickly say, okay, if I'm looking for bullish trading opportunities, and let me just go to my proper list. There we go. So let's deal with our, let's deal with the best stocks. Where are we? Exceptionals. Oh, no, let's do the, there we go. There we go. That's my usual list. So it's looking at the bullish box there. All it's doing is saying, is price above the 50 period moving average? So that's a mechanical scan. That's a mechanical evaluation. And that's what the first step is. So if I'm looking for bullish trades, then I've got a list of stocks that, okay, they're bullish. Now, conversely, if I think to myself, I've got too many bullish trades in my portfolio, I can start looking for bearish trades, and I can zero in on the stocks that are in a mechanical bearish trend. So I've got 1, 2, 3, 4, 5, 6, 7, 8 stocks that are in a mechanical bearish trend. So that's step 1. And if you notice, I've not looked at a chart yet, but I can, if I only want to look for bearish trades, because maybe I've got a bullish biased portfolio, and I think, you know what, I'm a little bit heavy on the bullish side, or maybe I think the markets are overextended, and I want to try and balance the ledger, balance the books, and start looking for bearish trades so that I can sell the rally. Number 2 here, sell the rally in a downtrend. Then I can start looking at, I only need to look at 7 stocks. Again, of my top 30 here, which is what this list is, my very best of the best, I only need to look at 7 stocks. So then the next step would be to visually inspect. Now, because I've got a mechanical evaluation, I'm expecting to see a bearish trend so that I can sell the rally. Just because I'm expecting that from the indicators doesn't mean that I'm actually going to see it. So this is why we have a visual inspection. Am I seeing what I'm expecting to see? A downtrend. And I'll just add the, just going to put that on for the moment. And let me just add the watermark so we all know what we're looking at as I'm doing it. There we go. There we go. So you can look at so let's start off at the top. So this is a bullish trend. It's Apple by the dip. All the average prices are going up and visually it's going up. Good example. So I'm expecting to see a bearish trend. So let's look at BHC. I'm expecting to see a bearish trend. I'm just going to highlight the row there. So I've highlighted the row below it, but I'm expecting to see a bearish trend. The average prices have crossed over. The number is saying 42 days ago that happened. So it meets that criteria that I like to use. The others are not important. It's just broadly looking for a directional trade at the moment. But now that I'm inspecting the charts, I can see, well, actually, something different is actually happening. So just because the average price, the 50 is below the 200, and we've got a mechanical bearish trend, and that's what that is right there. The 50 is below the 200. Classically, that is a death cross, is how the textbooks describe it. Don't stop rolling your eyes at me. I didn't make the name up. But the textbooks tell us that we should sell that stock, sell this stock, sell the rally in a downtrend. I don't know about you, but I don't see a downtrend. So just because the average prices are going down and the shorter, the 50 period, the shorter term average in price is moving lower than the longer term average in price, 200. That's what it means. But the textbooks would have us automatically sell the stock, hoping to profit from a downward movement in a stock price. And on one hand, that is accurate. It can be a good thing to do. It's certainly one of the main things that I actually look for. But visual confirmation. So we've got the mechanical scan, visual confirmation. Do we see a downtrend? Well, now we're looking at it. If anything, we can break it up. We've got a little bit of sideways here. We've certainly got a trending move there. But the thing here is that, and this is where the 20 period moving average comes in, the 20 is flipping and a flopping around the 50. It's flipping and a flopping around the 50 period moving average. So the 20 is going back and forth, yo-yoing above and below the 50 period moving average. So this is one of the clues that I look for in conjunction. So this is, although they're traditionally trending tools, it means that I can still use the trending tools when they're failing to operate and function as we expect. The 20s flip-flopping around the 50 period moving average. When that does that 3 times in a very short period of time, again, so 1, 2, 3, and again, we've got 4, 5, again, in a very short period of time, horizontally or vertically in price, then we can start saying things like, you know what, price is probably range bound. In fact, mechanically, it's range bound. So we're back to the visual confirmation. Is price trending? No. Further inspection, let's check the 20 period and the 50 period moving average, their relationship together. They're flipping and flopping. So back to the mechanical evaluation. Is it happening more than 3 times? Yeah, in a very short period of time. Yeah, with very little separation between them. Yeah. Okay, so price, while I was expecting to see a trend, is actually ranging. So should I apply trending strategies? A trending strategy would be buy the dip in an uptrend or sell the rally in a downtrend. Let's throw the question open. Should I now, with common sense and visual confirmation applied, I can override what the mechanical indicators are saying. Should I sell the rally? The textbooks would have us sell the rally blindly. the YouTube idiots who proclaim themselves as gurus and would have you sell the rally. The unwashed masses would have you sell the rally. It's silly to believe that just because you've got a tool, an indicator, the average prices in this case telling you one thing, it shouldn't mean that you automatically and blindly sell short the market or sell short this stock. Does that make sense? Like, I really want to emphasize this. For me personally, this was a huge epiphany. It really was. The indicators say one thing. And again, the YouTube idiots would have you believe that it's a sell signal, a sell signal. And what a stupid thing. It's not telling you anything other than what the average of price is in relation to a different period length of the average price. It's going to help guide us. It's going to help give us structure to decisions that we want to make. In a moment, you're going to see how it's going to help us buy the dip and sell the rallies. But for right now, this is not a trading opportunity. And this is probably the most important thing. And this ties into the waiting elements. It's not no, it's just not yet. It's not even today. It might not even be a trade that we can trade next month or maybe in a few weeks' time, because it's not doing anything. Visually, we can see it's going sideways, and it has been for 1, 2, 3, 4, 5 months. So until price moves out of that boundary, price is in a consolidation, and the average prices are going to contract and start getting closer and closer and closer together. Absolutely, Randall. Randall's made an interesting comments. The YouTube peeps, they do dumb it down. I've got to admit, I'm guilty of it as well. I want to dumb it down, but I'm dumbing it down for me so that I can do it. I want to make money from what I know and not sell a widget or a shiny object. And yeah, you can work with me, but you don't have to. I don't force it on you. It's not my primary business. I make good money from trading. I don't need to do it. So, it's, if someone's saying to you, like, and it's just one blue line, go long when it's blue, go short when it's red. Yeah, you can be that simple, but the reality is it's an indication. In this case, the average prices, it's suggesting one thing, but when we go and look at the charts, price is doing something different. So I can skip over it. Again, it's not no, it's just not today. So what I can start thinking about is one of the 6 money-making patterns. Again, number 1, number 2, 3, 4, 5, 6. Buy the dip, sell the rally, buy range lows. I don't know why I did that. That's it. Seemed like a great idea in my mind for a second. Buy range lows, sell range highs. So one of them is recognize that price is ranging. It is. Okay, mark off the range. Don't worry about the highs and the lows, and don't worry about the trend lines and all the other bullshit. Don't worry about naming the pattern. The phase, the money flow is not there. It is statements in a range. We're all in agreement. Doesn't care. It doesn't matter what it's called. You can call it a descending channel if you want. I don't really fucking care. It is in a range, horizontal, whatever. So what I need to see is price to be definitively outside of the range. Let's call that a breakout. We're all in agreement. That is what we'd call it. It's great. So then we can start selling rallies in a downtrend. And conversely, if it goes up, buy the dip, but only after it's broken the range. So if I want to apply a trending strategy to this chart, I've got to wait. And that's the key thing. We're going to get paid by waiting. In this case, we're waiting for the opportunity. We're waiting for the setup. We're waiting for price to behave in a way that we recognize. We're looking for the money flow to start choosing a direction. And right now, it's aimless. It's mindless. I would also argue that the range, and we've discussed this in our private group sessions, is not worth trading. So I would just leave this alone completely. So again, it's not no, I'm not never going to trade this, but I'm just certainly not going to trade it today. I'm not automatically selling. And you might get lucky. And this is the trap that we all fall into. You might get lucky once, twice, 3 times. And then the 4th time is what screws you over. And by that time, because you got lucky once, twice, 3 times, you've just increased the position size, you bet in the farm, and then suddenly you owe the bank a lot of money or your broker a lot of money. And we've seen lots of nightmare stories about that, particularly in the crypto markets, the digital currency world. And there's nothing wrong with trading digital currency. I know plenty of people that do it, but it's that allure of fast cash and rich riches and all the rest of it. It's you can retire in a week, and you can make a lot of money very quickly from the financial markets, but it's the exception and not the rule. Anyway, I'm kind of leaning on my laurels a little bit. Okay, so next up, again, looking for a bearish trade. We've got a mechanical scan. Again, I've got a bearish indication over here. So I'm going to look at HFC next. Again, I'm looking for a bearish trade. Now, just because the average prices are crossed, that's what they did. So 60 days ago, the average price crossed down. But just because that mechanical scan is telling me it's probably a bearish trade. Visual inspection, I think we can all agree that there is a contracting consolidation. Again, I think that's really obvious. That's the only time I'm using a sloping lines. But you know what? Let's not worry about it. Let's just say, you know what? Price is contained there. Price is contained there. I'd like to see multiple touches of the highs, at least 3. I'd like to, the lows. I'd like to see multiple touches of the highs. Wherever possible, I like to draw horizontal lines. I'm just going to say price is ranging. And the reason why I don't draw trend lines, and again, there's nothing wrong with it. I mean, someone could very say, oh, there's a symmetrical triangle, Phil. Oh, it's clear as day. Who fucking cares? Price is in a range. What the textbooks don't tell you is the evolution of price. The amount of times I've connected 2 points, we want 3. You can't draw a trend line yet. You know, the amount of times that you'll see trend lines drawn and then price just pokes its head above and then drifts sideways. Just because you see you can connect 2 points together doesn't mean that you should draw a trend line. And price action will evolve. Again, a good example of this is Tesla. Again, I think I've spoken about this a couple of weeks ago. Now, while the trade did work out, I've got to say that, benefits of hindsight, of course the trade worked out, but this is an example of evolution of price. And this was a trade that was pissing me off for several weeks, if not months. So again, very clear, 3 points of reference, 1, 2. So that's why I drew the trend line. Anyone can connect 2. So I've got 3 points of reference. You actually got multiple points. So I felt that was a suitable place to put a trend line. Horizontal, multiple points of reference. Okay, so we have got a descending triangle like that. I don't really care what it's called. I'm just calling it something so that you can recognize it. And at this point, it looked like there was a breakout. And this is what the textbooks don't tell you. Price has broken the trend line. It's going to go to the moon, baby. And it didn't. What often happens with these patterns is price meanders sideways, and that's exactly what it did. The textbook examples in textbooks, the textbook examples for a reason. They're looking at the perfect example after the fact with the benefit of hindsight, and they never teach you what to happen. Well, what if this happens? What if it just drifts through the trend line? And that's why I'm trying to get to the point of have a mechanical evaluation that's clinical, it's robust. Then look for a visual confirmation of what you're expecting to see first. And then if you want to add something that would be perceived as discretionary, trend lines for me are a discretionary tool. We can all place a trend line, a sloping trend line especially, in different locations. I've illustrated that many times in the past. So that's a discretionary evaluation. You can't replicate it the same as I replicate it, just the same as Peter or Raj or John or Mark or the other Mark or the other Mark. They've got a few Marks in today, or Mark, you know, all the different people that are here today. We could draw a trend line differently depending on how we perceive the chart. So we want that to be categorized as discretionary because it can't be replicated, but we can all replicate an average price crossover, a Dow 3, not Dow 3, the mechanical average price crossover, or a MACD, or an oversold or an overbought condition on an oscillator. That's a mechanical step that we can all use. So that should be the first thing that we do. Has a condition that I like to see on the chart been met? Yes, we're all in agreement. We're all going to find that evaluation. Then we can visually confirm, okay, that indication normally suggests one thing. Am I seeing that? Yes or no? And again, just to use the oscillator example, you know, an oscillator stochastic, for example, it would have gone overbought about here, and it would have stayed overbought for a long period of time. So just because something is giving you a reading doesn't mean that you should automatically expect a sell-off in this case. Same with the average prices. The average prices were crossed over there, bearish. Just because you've got the average prices crossing over doesn't mean that Tesla's going to sell off. It didn't. You know, we've got to visually confirm what we're expecting. And if there's conflicts, like we saw on the one of the previous charts, then we need to leave it alone. let's take a look at them. I'm looking for bearish charts. You can probably gather I'm looking for bearish indications. So again, I think this is a lot more clearer. Average prices crossed over. Logitech, this is what we were looking at over here. Bearish box right there. Been in trend for 40 days. Again, it's very clear to you, me, and everyone else. Doesn't matter whether it's day one, week one, month one, year one, decade one. Doesn't matter where your skill level is and how long you've been doing this. We can all agree there's the average price crossover, visual confirmation. Oh, price is going down. It's a statement of fact. No one disagrees with this. So now I know what to do next. I know which of my 6 money-making blueprints that I need to apply. So how do I profit from this? I need to sell the rally in a downtrend. So any rally could be considered a sellable rally in a downtrend, any green bar, but I want to further quantify it. When price goes above or touches the 20 or the 50 period moving average, that's going to be my point to say, sell the rally, sell the rally. So right now, looking for a new trading setup, price is not at the 20 period moving average. It's not touched it or it's not above it. So I need to wait for that condition to be met. Otherwise, I'm just going to be like every other Joe Schmo who chases moves and doesn't have structure and doesn't know what they're doing, when they're doing, why they're doing it. I've got what I consider to be a sellable rally. And that means that I'm not trying to get in anywhere. I've got 1, 2, and possibly a third level on the chart that are going to be interesting. They're going to be my high probability opportunity to get on a trade. And if you don't believe me that this is high probability, let me turn the algorithm on. I've got a mostly automated version of this strategy to make sure that I'm doing the right thing, to make sure that I've firstly got the right strategy. I've got the right stocks for the strategy. And this is the equity curve. It doesn't matter whether it's $1, $100, $5. It's per trade risk is what it's showing. And it's got a nice steady equity curve. I know I'm looking at the right strategy on the right stocks. It performs well. $1,000 in the last 20 years, since 1999, would have returned about $20,000 on average. I know these numbers can be smoothed out because there's very little money management. This is the worst version of the strategy, which is signal to signal. So the idea is if you're winning 44% of the time and you've got a success rate of about 1.4, so $1,000 in, $1,400 out, it should be, I should be able to do better when I start to apply money management, when I start to go from trading stock to trading options, when I start to apply hedging strategies. And they've all got their own rule defined. Again, I'm working on getting that coded up. But hopefully it should just illustrate, like, we've got a good strategy. You don't have to take my word for it. The numbers are there. TradeStation just spits them out. And I can sell the rally in a downtrend. And that's what, having a defined rule set does, so that your entries, your exits, your stops, your targets. And I'm not chasing every uptick or every downtick. I'm not chasing every movement that occurs. I'm trading a small list of bankable stocks consistently, methodically, as much as possible, because they're the ones that produce the goods. Again, some more examples. Again, I only got 7 stocks to look at. Again, assuming I'm looking for a bearish trade. Again, other trades that are going well. We looked at, again, just flipping on to the other side, the bullish trade. We looked at Domino's Pizza 2 weeks ago. Some of you may remember it, but we went and found lots of candidates for trading opportunities. So it's the same principles in effect. The average price has crossed over. The 50 is above the 200. That's my directional bias, a mechanical evaluation. Visually, it's going up. Great. Buy the dip. When do we buy it? So at this point here, price went below the 50. When price turns around, it goes back above the 50. And for anyone on my email list, you would have been sent an email saying, hey, Domino's Pizza looks great if you're in my trading community. If you're not in my trading community, you can go to antivestor.com/Slack. I'll pop the comments in there, but you can scroll back. You can go and have a look at Domino's Pizza when we post it. Anyway, if you're in the community, great. You'll get alerted. I don't charge for those anymore. In fact, let me just, if you want to join, so https antivestor.com/Slack. There we go. Okay, so that should mean that you can join. You can come and join the fun. If you've got questions after these sessions, by all means, shoot me a private message. So the point is buy the dip in a rally. Again, just because price is dipping, it's selling off. It's below the 50-period moving average. It's a mechanical evaluation. It doesn't make it an automatic buying opportunity. This is where the YouTube idiots and the unwashed mashers that we were talking about earlier, that's where they don't know what we know because they're not doing it. They're just regurgitating bullshit out of textbooks from the 50s. Bible dip. We've got a time-tested, proven, back-tested, forward-traded strategy that we know works. This is how it's applied. So just because price is selling off doesn't mean that it's a buyable dip. It's dipping in an uptrend, but it's not yet buyable. But I'm interested. And this is what we said with one of the other stocks. It's not no. Over here, it's just not yet. So when price turns around, because we don't know how far the dip will continue, and maybe the trend does change. Maybe it does. I don't know. No one knows what's going to happen tomorrow. But what we do know is that when it turns around, when it's finished retracing, we're going to say that price is back above its 50-period average in this case. We're going to go along. And that's exactly what we're doing. Now, again, I still don't know if this is going to make me money, but for right now, it's working out. Initially, looking for a retest of the high, big green box. That's looking good. So buy the dip. So what else can we look at? What else can we do? So what I'm doing now is I'm just looking down this other column. So this is telling me something different. This is telling me that we've got potentially strong moves. Again, just another scan that I use. It's a little bit beyond today's session and what we've got left, but we can look at something like Jeffries. It's in a bullish trend. It's been in a bullish trend for 286 days, and it's just starting to make another push to a new high. So we've got trend, a little bit of a range. Again, there's the consolidation. That's okay. Breakout, pullback, rally, retrace, rally, back to the 20. There's our buyable dip. It's easy when you've got structure. It's easy when you know the rules. I'm not saying that trading is easy. Don't mistake what I'm saying. It becomes easier when you know what you're looking for, when you know what you're doing. And it's as simple as start with the end in mind. Let's go back to the beginning, back to basics. It starts with knowing what you're looking for. I want to buy the dip. So I've defined what I consider a buyable dip is. I also want to sell the rally. So I've defined what a sellable rally looks like. I've also defines what I consider to be a range, mechanically and visual rules. When price is range bound, I want to be a buyer at the range low. I want to be a seller at the range high. Why? Because until something new happens, these same patterns are going to continue over and over and over again. Now, when something new does happen, I can start saying things like, well, now that price is, say, above the range, I can buy the breakout. If price is below the range, I can sell the breakout, and we're back to resuming trending behavior. Let me pause there. Does that make sense? There's only 3 market phases, market structures. A recent way I described this, these are money-making blueprints. This is the river of money. Like, this is another way of saying it. It's the institutional traders pushing price around and creating movements. Because as retail traders, we don't create long-term sustained moves. We can push price around, as we've learned earlier this year, on low float stocks temporarily, but the big stocks, the big trends with hundreds of millions of dollars traded every single day, it's the institutional traders that we look to follow. And this is the footprint. This is the blueprints. A map of money. Perfect, Randall. Money-making blueprints. So this is what we're doing. This is all we do every week. Again, I truly don't believe that trading is complex in the way that most people think it is. A little bit of knowledge can make you a lot of money. Again, I jokingly say, I'm a poor farm boy who figured a few things out. And that's it. I am just a regular guy who figured a few things out. And I figured them out very quickly. And this is all I'm doing. I'm not doing anything revolutionary. And again, for example, I spent 12 years just trading one of the patterns, the breakouts. It's a wonderful pattern. 12 years just trading one pattern. It paid me. I ran a hedge fund with 10 million under management with this one pattern. That's it. That's all I traded. You don't need all 6. You just need one thing that works. And I think the mistake that people make And so again, let's tie it into what we were saying with if you just wait for the one pattern that you recognize, you will make money. Just wait for the one thing that you see. And if that's buy the dip, just wait for the dip, a Bible dip that's well defined in the context of an uptrend, and just wait for that. Or if you want to trade counter trend, then you need to know what the trend is to be able to trade counter trend. Again, I don't like doing it. It doesn't sit well with my personality. Trade the range, buy range lows, sell range highs. If you want to trade the breakouts, buy the breakouts, sell the breakouts. Just wait for the pattern to unfold. And again, I would come back to don't worry about the patterns. There's lots and lots and lots and lots of named patterns. Again, the thing that the textbooks very rarely tell you is what happens when it mutates, when it evolves, when it changes from one shape to another. It's that mutation that they don't tell you. They're only the author's just describing the textbook's version of what is widely accepted. And in most cases, it was written in the 50s. I'm not saying it's wrong. It's just they don't tell you about the mutations, the things that go on in between from one stage to next. So if you just recognize the map of money, as Randall was saying, it's going up, it's going down, or it's in a consolidation. When you can recognize those things consistently, it gets easier. When you can start to put rules on where you're going to enter, when you recognize that it's trending up or down or sideways. So for example, we've got Apple on the chart here. This is just transitions into a rising channel. I did have a previous consolidation for any of our long-term viewers. I thought that was the breakouts. It's not working out. And that's just the way it is. So again, these are underperforming trades because previously I thought that the range was horizontal. With a little bit of time, a little bit of evolution. Again, this is an example of evolution of price. So I've got to take it on the chin. So I've got my rising channel. So now in a perfect scenario, I'd be looking to buy the channel low and sell the channel high, or sell the break of the channel low or buy the break of the channel high. Again, I'm sharing the word slightly because it's doing two things at once. It's both trending, going up, and it's contained in an upper and lower boundary. I'm going to default to calling this a consolidation. This is one of those, could be considered as doing two things at the same time. While we're here, let's just go through the top 30 stocks. We've got about 10 minutes to go. Bath, I keep going to say Bed Bath and Beyond, and the ticker and the name is very similar. BBWI, Bath and Body Works. So can everyone agree that this is a trend? Can everyone agree? Make it easy for yourself. When it's obvious, it's obvious. Everyone knows what to do. This is all I'm looking for. I want the easy button. It is going up. When price comes back to the 50-period moving average, buy it as it turns around. You've got 1, 2, 3 opportunities. I'm not buying every red day and calling it a dip in an uptrend. I'm filtering the noise out by saying what's a buyable dip. 1, 2, 3. We're making money. That's all that matters. Right now, if I'm looking for a trade, because price is above the 20, above the 50, above the 200, to tie it back into our theme, I need to wait. I need to wait for a buyable dip below the 20 or at the 50-period moving average. That's going to be my buyable dip. And I'm doing it on bankable stocks that have multi-decade research to say this stock swings. Its behavior and relationship with the moving averages are awesome. It's going to make money. So now when I layer on my precision entries, my exits, my stops, my targets, using stock options, apply hedging strategies if it's not working, I can start to smoothen that automated algorithms equity curve out. Check out CL. I've got some great trades on this recently. It's been trending. It looks like it's transitioning. We've got 1, 2 crosses. We've got multiple touches of the lows. So we've got a little bit of conflict. So we can buy dips. We've had a Bible dip. We've made some money, but now we've got 1, 2 crosses. Visually, it looks like it's changing. So I'm just going to default. I'm not sure whether it's trending anymore, but it looks like it's consolidating. So I've not quite got the 2 average prices to give me a mechanical, yes, it is in a consolidation, but visually, well, I think we've definitely got a support level there. Rough around the edges highs. Again, you could argue 1, 2, 3, 4, 5 touches there. The fact that that trending move that we previously thought was a trending move didn't follow through might just be the nail in the coffin to say, you know what, let's call this a range, which is what we did. So we now know that price is ranging. Let's mark off the range. There's the high, there's the low. Let's not worry about the specifics. Don't worry about the pennies. Don't worry. So where is price in relation to this range? It's in the middle. Don't worry about it. I want to take trades on at the range low, at the range high. Again, this is one of the patterns. Price is in a range, buy range lows, sell range highs. Now, I didn't recognize the range high at that point. Again, fast forward a week, benefit of hindsight, etc. Now we suspect it's a range. Okay, buy range lows. It's in the middle. I need to wait for it to be at the high or at the low. Until those two things happen, guess what we're going to do? We're going to wait. That's the trick to this. That's the secret to making money in the market. It's not finding the fancy setups. It's not finding the patterns. It's just knowing what you're looking for. We've got 6, but knowing what you're looking for and then waiting for it. That's what's going to make you the most money. I think that might be a wonderful place to finish. That was my big reveal. No, I think that might be a good place to finish. We're finishing a little bit early today. I'll take requests while you're potentially typing and doing something there. I'm just going to go back to the slides and I will finish off. Where's my... Okay, so a little bit early, I think almost abrupt ends, but I think that was a good place to finish. The money's made in the waiting. We know what we're looking for. I've given you my 6 money making blueprints. Every week I go through the 6 money making blueprints. I go through lots of live examples of what I'm looking for, what I'm waiting for. I've actually done very little trading this week, just for reference. I'm not pew, pew, pew. I follow my own advice as much as possible. I'm human. Occasionally I fall down. Occasionally I break those rules, but I'm always going to bring myself back on track. But nonetheless, the money is made in the waiting. So hopefully that's what you've seen today. I'd also like to finish off by saying thank you. You've all decided to spend some time with me again this week, this Friday. I don't take that for granted. We could all be doing something with our Fridays. We could all be doing something with our time. So again, from the bottom of my heart, thank you very much for deciding to spend it with me. What was your biggest takeaway? Let's throw the comments open. What was your biggest takeaway? Was there an aha moment? Was there something that just put a different perspective on the way that you view the charts or the way that you've previously thought about something? If you've got a big aha or your own little epiphany for a Friday, I'd love you to share it with the group and let everyone know, or let me know where you're at with your thinking. If you've got any feedback, if you've got any comments, by all means, let's do that. Otherwise, we'll land this plane, dock this boat, and head off out. The sun's over the yard arm. Certainly it is for me here. I'm going to start my weekend early. Patience is a virtue. Absolutely, Randall. Absolutely. Oops, wrong one. So, oh dear, oh dear. Oh, Mark, thank you very much for your kind words. Mark was saying structure is everything. You teach it perfectly. Thank you. Checks in the post. Randall saying patience is a virtue. Map of money was also some interesting comments. Thanks, Peter. Thanks for stopping by. Have a great weekend. Randall, thank you. Have a great weekend. Get paid to wait. Absolutely. How can we follow my trades? Mark, I generally, the easiest way would be to go into Slack. So Mark's just asking Slack. So you can go to AntiVestor.com, which is my site. I'm just typing it in now. HTTPS AntiVest, or I should know how to spell my website. So AntiVestor.com/Slack. So if you go to the link I've just posted in the chat area, Mark, you can you'll have to register with Slack. It's just a tool that I use, and you'll come in. You'll be able to see any of the past trades, any comments. You can obviously click on my name, like some of these lovely people have done, just to send me a private message, and you maybe ask a trading question that you didn't want publicly acknowledged. So you can follow the the trades there. I generally post, if you're on my email list, I'll generally post similar trades, obviously, because I don't want to spam your inbox. I do send daily emails, but I could send 3-4 updates a day if I wanted to. But if you go in there, you can follow along and you can get the commentary in the Slack group community. That's probably the best way to get in touch, just to follow along at a surface level. As I said earlier, if you do want to have a more formal arrangement, I do have a spreadsheet where I detail exactly what I'm doing, when I'm doing, why I'm doing it. It's part of the group program, although that's not the only thing in the group program. So if you want to learn how I'm doing it, where the entries, the exits, stops, targets, how I'm managing the trade, how I'm doing it all in real time, then we have a very interactive but small group version of what we're doing here. You can hop on the call, you can ask the questions, you can talk about the trades. And again, I also post exactly what I'm doing as I'm doing it, so that you can, the idea is so that you can follow along. One of the reasons why I do that, again, is that I do believe that the best way to learn how a portfolio is managed is by seeing a portfolio being managed. So it's part of what I'm doing. Again, it's not the only thing that you get, but you get the exact everything which is on the student spreadsheets. Scott, lovely metaphor, the river of money. Yeah, I mean, it's just I try and use a lot of flowery stories and wording just to try and illustrate this, because that's generally what it is. River of money. It is the institutional traders. We used to see the order flow when we were running the hedge fund. We had access to a few extra layers of detail, and sometimes it was clear as day. What the institutionals are doing, and they do leave clues. They do leave footprints that we can follow. Again, these 6 patterns are where that's taken from. If you can just go with the flow, by accident, you should make money. It should be possible just to join the party. Ezekiel, again, thank you for your kind words. Thank you for your kind comments. Mark, again, appreciate your kind words. He's saying I'm an outstanding teacher. I do try and do my best. The funny accent is a little bit off-putting sometimes, but again, thank you. How do we find stocks or industries that are trending? I generally just look at about 50 stocks. If you want to, Mark, if you want to take a screenshot, or if you want to press pause on any of the recordings, I've got a pre-screened list of stocks. In fact, if you join Slack, send me a private message, and the same things to everyone. You can have my universe of stocks. So I'm not looking at every stock every day, all of the time. I'm not just saying that because it rolls off the tongue in a whimsical way. Like my universe of stocks is less than 100. And what it is, it's based off the strategy. I've gone through and back tested stocks that have at least 20 years of data, so that I've got enough data to say this is a stock that trends historically well. So there's no new issues. There's no Robin Hood trades. There's no shitty stocks with no volume, like despite the big moves, GameStop before all the big moves. And I'm not trading penny stocks. I'm not trading low floats. I'm not trading stocks with no options, because I'm going to place a trade with an option. I'm looking for good stocks that have historical back data to support the strategy and the research that I've done over the last 30 years. So if you want, again, I'm just scrolling down slowly. So if you want to copy, if you want to send me a message, if anyone wants to send me a message, I will happily give you the stock list that I'm trading. There's no secrets. Again, I try and give as much away as possible to help you get success. Because if you want, to be fair, if you want personal attention, I'm not cheap. I'm not shy about it. I do consider myself an expert in my field. I'm pretty good. If I do say so myself, despite playing it down, I'm very good at helping you get results. And if you want that extra help, that's cool. If you don't, that's also cool. There's no pressure. Like, some people don't, and that's fine. But just understand that there's faster ways to get results. So again, Mark, thank you very much for your, second part to the question. How do you find targets? Eyeball Mark 1 is how I do it these days. 2 ways. Firstly, prices trending, prices ranging. Can you see that, Mark? If so, 1, 2, 3 crosses in the average price. So that point there, we've got a mechanical range. There's no ambiguity that we both agree. 1, 2, 3 crosses in the average price, just like we said earlier. Yeah, it's ranging. So at that point, mark off the range. There's the high. Again, there was no multiple touches, so I just marked off the boundary. Extreme highs, extreme lows. Buy range lows. Target range highs. I can short range highs, which I didn't, but target would be the range lows. So buy range lows, targets the range highs. Now we're looking at a breakout. I can target the height of the range and project it upwards for a target. So ranges, consolidations, the height of the range is the target. So that's one thing. The second thing is trending. So over here on the left, we've got a trend. Eyeball mark one. There's a push, there's a push, there's a push, there's a push. Okay, how big are they? That's about $15. That's about $20. That's what is it? 80. That's about $30. That's about $20. It's looking like it does $20 to $30 so far. What do you think? Can you see that, Mark? Again, all I'm doing is looking at the scale. It's about 15, 20, 30. So, okay, the low end 15, upper end 20. Let's just say $20 to $25 would be a nice average target. Let's look at the height of the range. It went from 120 to 140. The height of the range was $20. What a surprise. It's looking like $20 is what AMAT moves in increments at the moment. Again, and at the moment is in the last 12 months. There you go. Now you know the secret. Eyeball mark one. I don't overcomplicate this. I want the easy button. I want to go, there is the trade. And to be fair, while we're at this, for my insiders, this will be on the spreadsheets. This will be on the spreadsheets in about 20 minutes. I'm going to preemptively put the trade on, but we've got a first pullback after the breakout. This is what we call something new. I'm going to target $20 higher. I could target 2 times $20 and have target 1 and target 2. 20, 40. Cool. There we go. There's a trade for you. Buy the pullback, first pullback after the breakout, go long. That's it. Easy peasy. Randall, very kind of you to add those last words. If anyone's on the fence, that's very kind of you to offer that. If you're on the fence, Randall is saying, if you're on the fence and you're thinking about joining the party with the group, feel free to shoot Randall a message. So it's very kind of you to offer that. Thank you. I'm just catching up on a few comments, so just bear with me. Let me press record. In fact, no, I'll leave it recording because the questions are sometimes interesting. So lots of experience on, where are we? Okay, so we've got the industries that are trending. So I don't really care about the industries that are trending. I'm just looking for stocks that historically trend. I don't read fundamentals. I'm not looking at company reports. I don't really care what industries are hot or not. I want to trade the same stocks consistently, methodically today, tomorrow, next week, next month. So the last part of your question, Mark, is I'm looking for consistency and not a hot topic. And I appreciate that there's a style of trading that looks for hot industries. It's too much fucking hard work. It really is. I don't want to keep my finger on the pulse of the markets that much. I just want to know this is a group. This is a good group of stocks. Let's just flog that. Let's just do it and trade those stocks for, the next, 3, 6, 8, 12 months, however long that those trends last. Newer industries, electric vehicles. Yeah, you can do. I mean, if you want to look at other stocks, Mark, I think interesting discussion, Mark. If you want to look at other stocks like the electric vehicle industry, microchip processors the semiconductor industry is hot at the moment. It's only because of shortages. I mean, it's a generally good industry anyway. But if you want to get involved in the electric vehicle industry, I would say if you want to explore it because you're bringing, maybe you like looking at fundamentals. I don't know. Maybe you like looking at the industry news and stuff. I don't. It bores me to tears. I don't do it for that reason. So I'm doing things that I enjoy first and foremost. I like looking at the charts. That's all I like doing. I don't want to read company reports. I don't want to look at sector information. I'm not that interested. So I don't do it. If you are, then that's the thing. That's your secret blend of herbs and spices. That's the thing that you bring to the table. So you can add it into your doing. Maybe you've got, because if you just look at the electric vehicle, it sounds like you're interested. Maybe you just go and find the leading 3 or 4 stocks that are in and breaking ground the electric vehicle industry. and put them in your universe of discretionary stocks. I've got a list of speculative stocks for that reason. As things come across my desk, it catches my attention. So I'll just throw it in the, like Robinhood, ticker symbol HOOD. It's not ready for me to trade yet. It's a brand new issue. But I think that they're doing new things in the brokerage industry. So I've just put it in there. It's a temporary thing. I'm watching it. I'm keeping an eye on it. I'm not necessarily trading it yet. I may do in a few months' time. But for that, it just came across. I didn't go looking for it. It's just, it was hard not to see all the stuff and hype around the new issue stock. So I will do it from time to time. And I'll just have a little speculative list of stocks that are, just things that just catch my attention. I may trade them, I may not. But it's okay to do that is the point. But I would say that there's a fundamental reason for you adding 3 or 4 stocks in on that particular example. Absolutely, Zeke. I'm a trader first, I'm a teacher second. Thank you. Any trades for the weekend? AMATs, yeah, I think we've just been through that. I'm just catching up on the questions. Oh, Mark, very kind of you to say. Very kind of you to say. Mark is brand new to the community. So he's just saying he's saying, firstly, he's brand new, he's learning so much. So again, thank you for your kind words. I'm fixing multi-year mistakes. Well, it's easy to fix when you know, because I've made all the same mistakes, Mark. So it's easy to fix it because I've already fixed the failures on my own. I think as well, if I can help you avoid mistakes as well. So you don't make the same mistake twice, for example. I made some of these mistakes twice. That's a good comment there. Thanks for adding that as well, Mark. Yeah, I mean, again, just final comment, and then I think we'll wrap up. I think I've got to all the questions. I don't think I've missed anything. If you have a question afterwards, feel free to join Slack, send me a message. I'll get to it when I see it. But yeah, Randall, interesting comments. Retail traders, we are taught to look at news, fundamentals. To be a trader, you don't have to that. I'm not an investor. I don't need to look at the fundamentals. I don't need to look at company reports because my focus is between 1 and 3 months. I'm looking to get paid at the end of the month, at the end of the quarter. Occasionally, I'll day trade. Occasionally, it's the cherry on the top of everything I do. It's not the first thing that I do anymore. So again, I think when you're thinking about what's best for you, because everyone's situation is just a little bit different. Final thought on this, and then we'll hang up. Is the best way to think about this is how do you back in? What is your situation? If you've not got time to day trade, why you learn how to day trade? It's an obvious example, but it just illustrates the points. If you don't have to, for me personally, I don't like looking at fundamentals. The thought of it, I find it excruciating to read company reports, to follow the investor conference calls, to follow the earnings reports. The idea of that is incomprehensible. I don't find that an appealing prospect. So guess what? I am not going to do it. It's not that I don't think it works. I know fundamentals is useful. I know it could possibly add a dimension to what I do. But the thought of it, I just don't want to do it. So don't do it. And this is the personality of a trader. This is what's going to help you become more successful, because there's nothing worse than doing things you don't like or don't enjoy. I don't like the thought of fundamentals. I don't enjoy the prospect of digging through company reports to try and find some value, however that's defined. Again, I know that there's measures and ratios that we can look at. It just doesn't sound appealing. Don't do it. That's okay. Same with swing trading. Maybe you've sat here today and you've heard me talk about what I'm doing, the way I do it. And you just think, you know what, that's not for me. Great. Now you know what you don't like. And that's just as important as knowing what and how you want to trade. So think about the time you've got available and think about the things that you like, things that you don't like. Maybe you don't like the charts. Maybe you do like the charts. Maybe you don't want to insert the thing that you don't want to do or that you do want to do. And that's how I approached it. Very early on in my trading career, I made the decision, like, do I want to look at the pretty charts and the pretty pictures, or do I want to look at company reports? Great. I'm going to be a chartist. Great. And the more I'm doing this, I'm more a pure chartist. I'm just looking at the charts and just looking at the numbers. I'm very data-driven these days. But that's going to dictate how you trade. So back into what you want, the list of things that you do and don't want as a trader. And just keep in mind, money's not the objective here. Money's a byproduct of process, just like any business. Money is a byproduct. Of course, we're going to be profitable. No one wants to not be profitable doing this. Just like no business doesn't aim to not be profitable, but you've got to be good at something, one thing. A plumber doesn't try and be an electrician. An electrician doesn't try and be a plumber. Just focus on one thing, as we were saying. And the big key with what we do, just to tie it back into our main theme, is be patient. Focus on one thing until you get success, and be patient. And it's the fastest way, in an ironic twist, to get what you want from trading. Most of this week I've spent waiting. I've done very little from a new trade point of view. I'm just waiting for my opportunity. The market is in full rally mode. There's one or two opportunities, but they're just not quite ready yet. So you've got to be patient, and that will be a good place to wrap up. Folks, once again, thank you for your time. Thank you for your attention. As I say every week, because it's true, I don't take what I do here lightly, and the time that you give me. Again, we can be doing other things. So thank you for giving me the most precious thing that you can give me today, which is your time. We have focused on patience, and that's how we get paid. We get paid to wait for the setups, wait for the opportunities, wait for the trade management, waiting for targets to be reached. We've covered a broad base of things today. You've got a good insight as to what I'm doing in reference to production line trading. That's what I refer to what I do. It's very mechanical, methodical, and rule-based. And if you'd like to learn a little bit more about it, send me a message. At the very least, I'll always point you off in the right direction. And if it does turn out that we can help each other, and you'd like to learn a little bit more and learn from me more directly, then again, we can talk about that as well. And on that bright, shiny note, thank you. Have a great weekend. Make sure ice cream is involved somewhere. I shall be making sure that whiskey is involved in my immediate future, and I'm going to go and have a good time. Bye for now.